Hey, what's going on? It's Bad Dad from Hodl Hogs. We're looking at the Bitcoin chart. We're looking at its price action and its historical moves and seeing if this is an indication of a reversal to the upside. So getting right into it, let's take a look at Bitcoin, what it's doing today. Today it has actually started to somewhat recover initially, but it's hanging around printing out this red doji here, which really isn't much looking in at closer time frame. It really isn't much going other than trading sideways. So going back at it, we can see that yesterday it was a green doji, so a slight in the upside indication. And today we have a little red one. So this might be the reversal that we're looking for. And what makes me believe this? Well, first off, let's pull up a Fibonacci. That's my parrot in the background. He's just making a bunch of noise exactly when I decide to make this video. So I apologize about that. So if we're looking at the Fibonacci from its previous lows that it was down here back in June of 2021, taking it from the bottom to the top, you can see that it came down and almost pinpoint hit this 702 line right there. Now that's not enough for me to say, hey, this is a reversal, because I mean we thought this was a dip. If I would have put that right there, that's a 95% retrace from the top, right? It's like, okay, where is this thing going to stop bleeding out? And we can keep going down to another low and another low until our confirmation is until we're basically have some kind of confirmation that confirms our bias that we have a reversal. So here's our first indicator for me, all right? And the second one is like the lack of volume that we're having right over here in this sellout. So after we broke this wick, I would have expected a lot much further downside. After breaking this wick here, losing confidence that this didn't hold, but it really didn't do anything. You had a little bit slight uptick in the volume, but the day that it actually broke this would have been here, and that volume was actually not even. I mean, it's nothing very impressive. Yeah, there was an increase in volume, but you can see that it's actually slowed down. Moving on, we're looking at this RSI. On a bull trend, if you look at the RSI when it's come down to hit this daily, the daily RSI at the bottom of this line, which just sits somewhere in the 30s, yeah, about 30. If you look back, every time it's come back around to hit it or close to it, it's actually reversed in direction, and you can see it comes down over here, and then it pushes back up, comes down over here, swings back around. Hopefully it pushes up, but I mean, let's go back. Here it pushed up. Even here it pushed up, right? Here, even when it came down to it, it pushed up. Over here, it's all just a bull cycle up. But coming down over here, when it came down and touched it, it pushed up. And over here, it actually blew through it. And this I would say is probably, all right, so this was the March 2020. Somewhere over here was the end of the bear cycle, which would have been here. So it came down through this, came back up out of it, touched it, and it started pushing again. So here you go. And every time since then, when it comes down to at least this line, breaks through, you want to see it, that comes back up, touches it, it'll push back up, right? Does it again, pushes back up. Comes here. This one right here is a one-off where it just basically blew out of there. You never got another chance to come back around and touch that bottom. So it would have been something that you would have been paying very close attention to during that time. So if you're waiting for it to come back around in price after it made this low, and you're waiting for an indication to buy back in after it hit the RSI bottom, you would have missed out. But after having such a large sell-off, already hitting previous lows, double tapping with pretty much the all-time low back here in 21 December 2018, that'd probably been a good time to get back in. But here you can see again, moving back forward again, every time it comes back down to this daily RSI bottom, that 30 line, it's continuing to push up. So here we are again today. We've hit this bottom. We've actually kind of slightly broken underneath it. But if you had to take a chance at probability of which direction this is likely to go, it's, for me, as a hog, I would buy in. And if I was trading on margin, which I don't, I'd put a stop loss right here underneath. Now let me go shut this bird up real quick. All right, I'm back. Put a blanket over his cage so you can't see what's going on around him. and he's looking at me to try to get me to come over there and feed him something, or him bite my finger, or whatever it is. But anyways, so it's all about probabilities and percentages, right? So if you had to put your money on the market in which direction it's going to go, now's the time to put your money in for a long position. Yes, if you are wrong, your risk ratio here, what I would do is probably put a stop loss somewhere underneath this recent wick or right underneath here, because there's definitely going to be a bunch of stop losses set there, and just see how it plays out. But if you're playing probability, because we all get slaughtered, every one of us gets slaughtered at some point. You just don't know where the bottom of the market is or where the top is, so you have to play that probability game. This is probably where I put it. That's a good indicator for me. That's enough for me to say, hey, this is a reversal. This is signs of a reversal. Not only that, so again, you multiple indicators here. Also, you can see that the fear and greed index here is at pretty much one of the all-time lows over here, right? Not the all-time low, but it is in pretty much all-time low range right in here, right? The 10s. If you look at what's been doing today, it's at 23. Yesterday, it was at 10. Extreme fear. So it's been sitting in an extreme fear pretty much this entire month. You can see here, just sitting down here in this fear range, fear/extreme fear. And if you look at this time, this lasted for about what, a couple of months. We're sitting in fear, extreme fear. Here we're sitting about a month and a half. Over here back in 2020, March of 2020, it really didn't sit there that very long. About the same amount of time as we're currently at right now. But its fall came from what, the 60s down in the 10. We came from up here in extreme greed in the 80s all the way back down here, which is a pretty big sell-off, pretty big change. So a lot of people, if you're looking at sentiment right now, they're pretty bearish. They think that the market's going to continue crashing, and now's the time to be buying up those assets that they don't want to be picking up. Talk about what kind of assets. I mean, we can talk about it all day, but I think just now, the one thing that we should know is that I think this is the sign of a reversal that's taking place. So I think you guys should, look into the charts, look at it for yourselves, but don't take anything that I say for financial advice. This is just entertainment, and hopefully you don't get slaughtered, because we kind of paid a little bit right through here. A lot of us paid through it right here. You learn from your mistakes. I learned a lot in this crash here. Learned a lot in this crash here. Probably more in this crash. And that was margin. The lesson here was margin trading, over leverage trading, right? And then what you learn here is the liquidation events. So how many waves actually goes down, or how many times does a market continue to going down, and what does each one of these buys and sell orders actually mean. So imagine you put in an over leveraged trade here for like a 3x, a 5x, or whatever it was that you decided to do. Some people were doing 10x's, and you lost, let's say, 5%, 10% of your portfolio. When you think that this market is starting to recover at this point, because you've been trained to say, hey, it's been recovering every single time, just buy the dip, buy the dip. So you buy the dip and you want to make back the profit that you just lost. So you then go ahead and double down on your leverage trade. You even trade even some more, maybe even put some more money into the exchange so that you can cover your leverage trade. And then you put in, or you put in more leverage against whatever you've lost, so that you can make it back up, but it continues to go back down. So as it's going back down, you're like, okay, what am I doing? Am I going to sell off? You get to the point where you become in denial that it has to turn back, and you're right here. You thought it's over. Maybe you leverage some more right over here because you didn't really catch the bottom. You're trying to find out where it was going. You over leverage some more over here, and then it starts coming back down. You see the same pattern repeating itself over and over again, and this is what would be the Wyckoff accumulation. But at this point, you're so far negative, you're starting to collect fees against you because you can't cover the cost. You're starting to accrue some daily lend rates, right? That's what's going on. So eventually, you're going to have to decide whether you're going to kill your losses or you're going to get liquidated. Most people get liquidated, and once all that sell-off has occurred, you can see that it kind of like stabilizes and normalizes a little bit until you get a spring, maybe another spring, and it starts taking off back up to the upside. So looking at that and that chart, I noticed that if this was right, the Wyckoff, so there's plenty of Wyckoff accumulation phases. You got in the dailies, you got in the hourlies, you have them in the 15-minute and the 1 minute. They occur in all time frames. So if we're looking at a daily time frame and saying, okay, could this be one of the Wyckoff accumulation phases in this green box that we saw? Well, some people would say that this is exactly what happened, right? You have a selling climax, which when the heavy investors bought back in, you can see this wick that it came off of, right? Came back up here into an automatic rally, back into secondary tests, higher ups, and then what I would consider the spring, right? Breaks all these lows, but then broke out that low, and there wasn't much of a selling pressure to the downside once it did that. But then I also think that this could actually have been the spring. This was just a secondary test, and you can see that just this long, drawn out event that just slowly bleeds out until it gets back down to this point. I think this was the actual spring. I don't know which one would be it, but whatever this event was before it took off back up, breaking range high, coming back in to back up, and the last point of supply or last point of support right here on top of that range high. You can see that green bar and takes back off, and then you had what, a move of 67%. So in total from here, if you were accumulating back here to here, you had a 131% gain just in Bitcoin over a period of, what is that, 155 days. That type of money you don't make in the stock market. But here we are again. So that's why there's a lot of trading. There's a lot of activity. Bears make money, bulls make money, pigs get slaughtered. Like, that's exactly what's going on. They're making money in both directions here. Coming back down, you have another event of a selling climax, an automatic rally, a secondary test. And is this the spring, right? It broke the low, like we saw back here. Broke the low. It didn't sell off even further down, but then it actually maybe starts picking back up, and we may have another long drawn out a sell off that occurs, or this may have been it and it takes off. I've seen where it just goes from here and just pushes up higher up. It doesn't even have to really conduct any of this. This could have been the backup and the last point of support on top of this line right here. It doesn't necessarily have to follow exactly these patterns, right? But there's similarities. So we're looking for that similarity here. The similarity here, a spring might occur. Similarity here when historically you've seen the RSI hit the bottom. I mean, even in here, you have the RSI coming down near the bottom. So these are just good chances to buy in. If you just put buy orders down here on the bottom of these, the last whatever couple millimeters according to this screen of this RSI, so like from 20s to about 20s to like 35, likely your chances are that the market's going to reverse back in the upside, unless you have a no shit indicator of a bear market like you did right over here. It just kept coming back down, hitting the dailies until it keeps bleeding out into capitulation down here, right? So anyways, video's gone long enough. Good luck to you all. Again, not financial advice. Do your own research, and maybe next time we'll talk about different alts. So I think alt season is about to pick up, as you can tell from the changes in this Bitcoin dominance. So good luck. Take care.